Hello and welcome to another BioCatch fireside chat on LinkedIn Live. Today we're going to be discussing some post-pandemic emerging trends. In particular, we'll be talking about AML and mule accounts and how fraud and AML and even security functions are working together to address some of these emerging issues. With me today is Erin Englund, who is a threat analytics lead here at BioCatch, and Andras Cser, our featured speaker, who is an analyst with Forrester. So let's start with you, Erin. Thank you for joining us today.
Thank you, Peter. Happy to be here.
So before we get started, Erin, why don't you give us a little bit of an introduction? Who are you? What do you do at BioCatch, and how did you find yourself in this field of fraud and working with financial institutions to help them fight fraud?
Yeah, so I've been with BioCatch for about 4.5 years now, and I lead the threat analytics team for North America. My team works directly with our customers, consuming BioCatch data, utilizing our products, and tracking fraud trends. So we're in the trenches with our customers. I've been in this space for 19 years. I have a background in e-commerce. I worked for eBay for several years and CyberSource working with e-commerce merchants. So I think I kind of ended up in fraud similar to a lot of my colleagues, just kind of by accident. And, there was a rising need of just a lot going on in fraud back in the early 2000s. So I really just dove in and kind of found my way over the last 19 years.
Well, we're glad to have you.
Thank
Now
you.
I want to turn to Andras. Andras, thank you for joining us. And why don't you give us a little bit of an introduction to who you are, what you do at Forrester, and what brought you to your role at Forrester as well.
Sure. So basically, the strange accent is Hungarian, right? I was born and raised in Budapest, Hungary, and I got relocated to the US for an intra-company relo. So I was doing a bunch of tech support, professional services, and then kind of gradually shifted and moved into identity, customer-facing identity, and fraud management. I've been an analyst with Forrester for a fairly long time, about 15 years now. Prior to this, I was actually doing these kinds of projects. I'm one of the few analysts that not just writing and talking about things, but they have hands-on experience as well. So yeah, totally. So it's been a long journey. Love being an analyst. It's all good. Yeah.
All right, thank you, Andras. Let's turn back to Erin. Erin, let's talk about some of the emerging trends in the post-pandemic world. What are some of the emerging threats that we've seen since the pandemic?
So I would say one of the biggest threats that has really kind of emerged just in this post-pandemic world that we really weren't seeing before, and in fact we aren't seeing on a global scale. It's really isolated to the US, is the emergence of bots used to create deposit accounts with retail banks. So the bots are different than our traditional bots. We're seeing we first started seeing this trend last year, 2021. It was really emerging with targeting stimulus packages like COVID relief funds that were introduced by the CARES Act in the US. There were increased amounts of unemployment relief offered by the states. And I think it's pretty well known within the industry how much fraud or how much of these funds were targeted by fraudsters and use of stolen identities to apply for unemployment relief. I think I know quite a few people, in fact, who received letters in the mail that they had applied for unemployment when they in fact did not. Their identity was used, right? So what we were seeing at BioCatch on the bank side was that these identities were being used to create deposit accounts. So they had a home for these funds to go. So they're creating en masse just thousands of accounts at the retail banks. So in 2021, we really saw the rise of these bots. It didn't stop there. Even when those funds had expired, we saw a reemergence of these bots in 2022 with tax relief, tax filing. There were some stimulus packages offered at the tax level, family like funds for families, and we're still seeing this ongoing. So it didn't stop even after tax season. We're seeing these resurgences even post tax filing season. There's different stimulus packages that are offered at the state level, so different states are being targeted, but we're seeing a pretty high rate of these bots being used to create deposit accounts within the banks. And as the banks add more controls to combat these bots, we're seeing a lot of changes within the behaviors of these bots. They've shifted from, traditional scripting where we see they're going through the application very quickly to what we're calling hybrid bots, where we see a mixture of human activity and bot scripts being run within the same applications. The hybrid bots have been very successful in evading more of those traditional fraud controls. And I would say second to that is we're seeing a lot of mule activity, a very high rate of mule activity. So the bots do fuel the mule accounts. They're definitely related. We believe these bot attacks are being created as mule accounts, but according to BioCatch data, we're seeing 1% of mule accounts are being opened by a bot. So there's still quite a bit of mule activity out there. The bot attacks are isolated to deposit account opening, and in many cases, the fraud losses don't start accumulating for quite some time after that account opening step. So they kind of go undetected. They fly under the radar for quite some time. We believe that fraudsters are stockpiling a lot of mule accounts for activities down the road. They also help, evade some traditional controls like account takeover, or when we see, different individuals taking over an account or scams. But not all mule accounts are created up by bots. They can come in a variety of forms, spanning first-party fraud, where we may have a complicit individual creating an account using their own identity for the use of mule activity, account takeover. We see sold accounts, and elaborate scams like romance or work from home scams can also be fueling those mule accounts.
Can you share any statistical figures as it pertains to bots being used in account origination fraud?
Yeah, absolutely. So according to our data, they're proving to be a major challenge for US banks and some very large US banks as well. In some cases, we're seeing up to a third of deposit accounts being opened or being opened by bots. And in some days, we definitely see them come in waves. So we'll see, a bot attack come in over a weekend. Sometimes up to 50% on that particular day of accounts opened are coming from bots. Banks who offer financial incentives to open deposit accounts, like any kind of cash back or a deposit if their account's open for a certain number of days, they tend to be targeted more aggressively by fraudsters, and we see a lot more changing in those bot behaviors to try to evade their detection methods.
Okay, I want to turn the conversation back to Andras. Andras, we've seen increased scrutiny on relating to mules, largely as a result of the government stimulus programs that Erin was speaking about. What are you hearing from financial institutions that you work with, and where are they struggling to address the problem? Where are the gaps?
Sure. So, I mean, first of all, the whole digital transformation, right? That just had a huge accelerative factor during the pandemic and COVID, like with all the face-to-face processes being put on the shelf or on hold, right? And everything being, kind of at least temporarily moved to the whole online types of channels, right? So digital onboarding has been super, fast accelerated, right, by by a lot of organizations, right? So that's the thing, and obviously, COVID created a double effect, right, in terms when it comes to fraud management, right? First of all, it was an impact of obviously the stimulus at a later stage that created, a lot of fraudulent activity. A lot of people, felt they could, move their money, quote unquote, creatively. But there's also been people, losing their jobs, right? Wanting to, kind of turn to not entirely, honest means of kind of making a little bit of money, right? So that's been, the whole kind of perfect storm, if you will, for increased fraudulent activity around mule accounts and identity theft, if you will, as well as the compliance. So there's always fraud management, fraud aspects around this, as well as money laundering aspects. And in our estimation, the whole fraud loss number really increased completely disproportionately, about like 15-20% during the pandemic, right, because of these factors, right? And mule accounts have been playing a big role here as well. So it's all also digital payments have become a lot more adopted. That's another aspect. Been a lot of discussions. The business is definitely trying to generate adoption for digital peer-to-peer real-time kinds of payments like Zelle, Venmo, and others, right? And Revolut and Wise in Europe, and other kinds of payments, right? So so there's a little bit more tolerance towards fraud, right? And this whole more tolerance from the side of the business really coincided with the stimulus and with like people trying to improve their lives, really. So that's just kind of created a perfect storm as well. And obviously the volumes have gone up, right? Digital payments, peer-to-peer payment volumes in and of themselves, have seen an increase as well. And I don't cover that, but anecdotally we've seen quite a bit of digital payments, increase in terms of absolute monetary value, as well as a percentage of payments in general.
So with respect to behavioral biometrics, I mean, clearly behavioral biometrics go well beyond traditional use cases when it comes to new account fraud or account takeover, including bot and mule activity that you've referenced. What are the traditional fraud and authentication controls missing when it comes to detecting this type of activity?
Sure. I mean, most organizations, have some way of an onboarding, so identity verification or KYC, as well as authentication, typically two-factor authentication kinds of things, right? But especially authentication, a lot of organizations are still, unfortunately, are relying on passwords, right? So, and a password has just run its course, right? So the issue there is that if a password has been snooped, caught, social engineered, cracked, brute forced, reused across channels, etc., right? Whoever has the password can log in, right? I mean, that's just a simple reality that, SMS, smishing, right? Taking over mobile phone numbers and kind of doing a SIM swap and directing the victim's phone number to a new, to the hackers or fraudsters' physical devices also be rampant, right? And so, these kinds of controls have been largely proven less effective than the banks would have thought. So, really, right, the authentication controls that are missing, right, is in-session continuous authentication. So once the user logs in, right, is the activity of the user in line with, in essence, what the user had been doing before, in terms of mouse movements, in terms of swiping the screen, in terms of typing patterns, in terms of holding the device, ambient light sensors, device identification, device fingerprint, or are we seeing something completely different, right? Because if we're seeing something completely different, right, from the user's normal activity, that has a high likelihood of being an account takeover activity. So everything is okay, right? The user apparently showed their password, typed their password fine. They were able to pass the two-factor authentication control somehow, but still, within the session, we're seeing that this activity is different from the normal user's activity And this can be due to, a human, kind of fraudster doing other things, or it, than the victim would normally be doing, or it could be like a robotic, non-human activity. Obviously fraudsters are always shooting for, the biggest, kind of bang for their buck, so to say, or the highest efficiencies. And so they try to automate, things, account takeovers and unauthorized activities to the best of their abilities, right? So I think these are the, authentication controls, that are predominantly missing, right, from banking solutions or really anything that would have high risk, high value transactions.
Can you talk about how behavioral biometrics or behavioral based solutions add value or fit into a layered fraud management strategy?
Sure.
I mean, there are other technologies here. How does that fit in?
Sure. So I mean, behavioral biometrics obviously can tell apart people from non-people bots, right? So, there are some sites that, want to allow some robotic activity, the good bots, and there are sites that, they don't, right? They just want to shut out all the bots and basically make sure that this is a human being, right? So that's number one. Number two, I would say account takeover detection, right? That is probably the biggest value of behavioral biometrics in a layered strategy. And I would say that if you see like a seemingly risky activity, let's say you have an account which is being accessed from, normally from a IP address and geolocation from, say, within the continental United States during like 9 to 5, local business hours, and everything checks out fine, usually, and that's the typical behavior of the user. And you see a certain behavioral baseline, how the user moves the mouse, swipes the screen, holds the device, types on the keyboard, etc. And then you see the same account being accessed from a brand new device, say in Southeast Asia in the middle of the night, but you're seeing similar activities, say screen swipes, movements of the mouse and typing patterns and device, how somebody holds the device. In theory, this type of activity would be highly suspicious, right? Because you see a new device, you see a brand new IP address, it might be in a whole country, but the fact that the user exhibits the same behavior from this new device, new IP address, maybe rogue IP address, as the user was exhibiting from their old, or normal, IP address, actually, points in the direction, right, that the risk is actually not high here because it's the same human being. They may just have traveled, right, to a location. They may be on a business trip or some kind of a personal trip, right? They're just, accessing a device from an unusual location, but what they're doing is definitely in line with what they've been doing in the past. And because of this, you don't have to inconvenience the user, and you can de-escalate this kind of activity from this anomalous context.
And what other technologies are in place that deal with these kind of issues, and how does behavioral analytics fit into the calculus with those other technologies?
Sure. Yeah, I mean, there's a number of different technologies. I mean, you can look at the device fingerprinting. As I said, you can understand, what the version of the operating system is, what kind of IP address there is, what kind of fonts are installed on the device, screen resolution, and off of this, you can build a device identifier, and you can build a reputational aspect around this device identifier, right? So, for example, if you say a same device ID opening or trying to open, 300 credit card applications under different names and social security numbers or whatever, national identifiers, banks are using in that geography, that is typically not going to be a good, kind of a normal, innocuous kinds of activity, right? Because somebody's trying to kind of submit a ton of different typically fraudulent forms from the same computer or same mobile, device, right? So device fingerprinting, or risk-based authentication can help with these types of activities. That if you see somebody, as in the previous example, usually logging in from an IP address in Iowa from a home or work computer during 9 to 5 local time hours, and the device ID changes between 2 or 3 devices. But if you see a brand new device, coming in the middle of the night from a geography or IP address that you have never seen before, that could be a high risk activity, unless it's been de-escalated by behavioral biometrics, right? So that's risk-based authentication / device ID, device fingerprinting is one technology. Another technology that I would add is we call it transactional monitoring, so enterprise fraud management or e-commerce and retail fraud management kinds of activities, where you're actually looking at payments, right? So basically, you're looking at card numbers, card BIN numbers, or credit card account numbers, expiration codes, and trying to kind of find stolen or lost card numbers being used at merchants or issuers, right? So that's definitely transactional monitoring. And the same thing applies to payments like wire, ACH, account to account, and to some degree peer-to-peer kinds of payments. So really looking at a flow or stream of payment transactions and payment transaction attributes. And lastly, I would also add 3D Secure, which is really about preventatively, asking people to authenticate, when they're trying to make an online card not present card transaction. The user is then being asked to authenticate with their issuer, with their bank, whoever issued the credit card that they're trying to use online. And there's a handshake between the merchant and the issuer that actually happens in the background to make sure that the user authenticates. You can do this explicitly, you can do this implicitly. PSD2 in Europe, focuses a lot of quite a bit on doing this implicitly based on, again, risk factors like IP address, geolocation, or IP or device identity, device reputation.
So in each of these technologies that you just talked about, behavioral biometrics is working in tandem with those technologies, and it sounds like offering an additional point of view, if you will, or sanity check to those indicators, saying, so if that IP address is being spoofed or the browser is being spoofed or whatever the case might be, there's an additional layer of observation happening where, if one is right but one is wrong, clearly it needs a second or third look. Is that a fair way of
100%. So basically it is relying on multiple layers or sets of signals, right? You're relying on the approach of the user, on the the IP address of the device type of reputational aspects. That's one layer. That's the risk-based authentication device side of anything. Behavioral biometrics provides the user context, like how the user moves the mouse, swipes the screen, holds the device, types on a screen, etc. So the interactive nature of the activity in the transaction. Enterprise fraud management looks at the business backend. What is the payment? Are you receiving like a super large number of funds? Are we seeing a repetitive, $3,000 being moved, right, just to stay under the radar kind of things, in AML, money laundering kinds of things. And then 3D Secure really looks at it from the card perspective, right, from the card not present, card account number, and treating that the card number as the primary key attribute of the user.
I'd like to use this theme of using, sort of unlike technologies to paint a more complete picture as a segue into another topic, which is, this emerging topic of fraud fusion centers and bringing in other what were, previously siloed practices, such as anti-money laundering or security operations and fraud together to achieve theoretically or ideally better results for all three. What are your observations relating to the cooperation or lack thereof of fraud, AML, security in the organizations that you speak with?
Sure. So basically, we call this phenomenon, FRAML, fraud management and AML. FRAML, we've seen a lot of kind of marketing, and I'll start with the reasons why it will not work, and I will just end on the reasons, what the synergies, why it will work. Okay, and my kind of belief is that it is actually going to work, right? So what are some of the naysayers saying, right? What are the detractors from FRAML? So FRAML is basically, traditionally two, kind of fraud management and AML are traditionally two separate areas, right? Organizational silos, organizational elements, right? And people in general, right? They're defending their turf, right? I mean, that's just the best way of putting it. So that's one thing. Traditionally, fraud management, both and AML have both been batch-based. In other words, you didn't have to make a decision call right away, right on the spot. And then what happened, as payments actually moved more and more into real time, right? Starting with ACH, wire, and et cetera. Fraud managers realized that, hey, we need to move to real time, right? But AML, right, interestingly, stayed a little bit behind fraud, and it still stayed, in a batch-based, it's not real time, it's just business real time, maybe. We have always 30 days to file a suspicious activity report, and there's no rush, right? And it's better to do, AML activities in more kind of paying attention to false positives, and really AML was more like a non-real-time thing. What caused the change here, right, was basically these peer-to-peer or digital or new style payments, right, where there is no way for the bank or the payee organization to recover the funds, right? Once the user hits the button, right, you have to examine the transaction right on the spot, because there's no way for you to recall it, right? Once the money is gone, it's gone. It's like, if you have to refund the customer, then the bank needs to eat that, absorb that cost, and write it off, basically. So, and that really caused AML to move from this offline, non-real-time kind of stature to a lot more towards, real-time. So that's, the timing of these transactions was another kind of thing beyond the organizational silos. The third thing I would mention here, what the naysayers have been saying, is that, hey, it is compliance. We have to do this anyway. AML is compliance. There's no change here, right? I mean, we are mandated to do this, right? We got our own tool sets, we got our own vendors, we got our own system integrators, service providers, et cetera. And fraud management is just a completely different domain, right? This also has started to change. There's a lot more tools and capabilities that in products that point towards these unified processes. So what are some of the drivers or synergies why I would say that FRAML integration actually will happen, right? So number one, data integration. You have to be able to pull in the data, and a lot of times, the AML team has already, been able to bring the data from the transactional processing systems, of which there may be many, into the AML, unified platform. So the data integration has been done. It is logical, right, that the fraud team will not redo this integration, in their own little world silo, but build on what the AML team has already done, right? So there's the data integration synergies that are definitely important. Number two, I would say that you're looking for the same kinds of patterns, right? So I mean, fraud management and money laundering really, in reality, walk really hand in hand. There's usually some correlation, not necessarily causality, but correlation between fraud and money laundering activities, right? So in essence, the machine learning models, the rules-based heuristics models, AI, and everything else that you have in AML, and the same stuff that you have in fraud management are the exact same things, right? It's just they have a different label. If you look at a vendor product, right, you're going to see very, very similar kind of tooling and infrastructure and data science kind of skill sets, right? So that's number two. Number three, there is a lot of synergies in collaboration. So co-locating the AML and the fraud management teams in the same call center, in the same kind of investigative environment. Usually, it is still like a separation of duties story here, right? But co-location and collaboration is helpful. So typically, the way things pan out, right, is that fraud management people, fraud investigators do not have insight into the AML investigation process because, of tip-off concerns, right? There might be some tipping off happening, that the fraud investigator tips off, fraudster about, AML investigation happening. So that's number one. But the other way around, AML investigators would typically be able to look at fraud cases to provide them with more, context, right? So that's definitely part of it. And then, in general, there's a higher level of customer experience, right? You're able to actually, provide a much better level of customer experience by kind of co-locating these types of activities in one place. And as the models are being unified, rules-based, heuristics-based, machine learning, AI, supervised, unsupervised, machine learning-based, there's a lot of synergies and cross-pollination in data science, model tuning, and really case management that you will see here. So these are just some of the reasons, right? Not just because vendors are marketing FRAML like crazy, but there's some absolutely operational reasons why, FRAML does have, a lot of validity in real life.
Andreas, any final thoughts before we conclude today?
Sure. I mean, what I would say, right, is that fraud management is always going to be a cat and mouse game, right? So organizations have to accept that fraudsters sometimes know the companies, banks, e-commerce providers, and insurance companies' internal business processes much better than the organization itself does, right? Which is really crazy. But it's always going to be like a combination of tooling and technology with human intuition and human investigation. So that's number one. Fraudsters really have to get it right once, right, to be able to steal money versus fraud management and money law AML practitioners have to get it right all the time because of the regulatory pressures and fairness of models, et cetera, governance of models, et cetera, right? I would argue, right, that these types of activity, these types of kind of contextual pressures, right, that mandate that you have an ongoing process, right, for fraud management, and where you're able to kind of sit people around the board table and really talk about these problems continually. So that's number one. And number two, participating in conversations with your peers, right? And or even the regulators periodically, once every quarter, really kind of helps with these types of challenges, right? And learn some best practices, hear some juicy gossip, et cetera, and be able to together, beat fraudulent activity. And as we talked about earlier, the third thing is just, never rely on one set of tools. Like, it is really a multi-layered, multifaceted problem, where you have behavioral biometrics, risk-based authentication, device fingerprint, fraud management, enterprise fraud management, transaction monitoring, as well as 3D secure card-based tools as well in the picture.
So I want to wrap up with Erin again. Erin, welcome back. Do you have any final comments?
I do. I highly recommend that banks get a handle on, what's happening within their organization. Do they have a mule problem? Do they have a bot problem at deposit account opening? And in fact, BioCatch does have products to combat these issues. We do see, behaviorally, we're able to monitor those micro behaviors to determine, is it a hybrid bot? To determine, is it mule activity? And in fact, mule activity can be an operational cost and headache for the banks, as it can span so many different points of the organization, and the costs can really pile up in lengthy investigations. So highly recommend getting a handle on this, getting ahead of the game before it becomes a huge financial issue.
All right. Well, thank you, Erin, and thank you, Andras, for joining us today. And this concludes our session, our fireside chat, and we look forward to seeing you again soon.